It's Friday, the 17th of February, 2023. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. Let's jump into it. Story number 1, how about this? Telstra gave a bit of a shout out to investors yesterday, saying, basically, don't forget us. The country's largest company in terms of shareholder numbers beat market expectations, triggering a 2% jump in its share price to $4.22.
Yes, total income was up 6% in the December half. Pre-tax earnings were up 11%. Net profit was up 27%. All of that, all good numbers. Now, that meant that Telstra paid a bigger dividend that'll please the 1.3 million shareholders in the telco. The drive of the business nowadays is mobile. It makes up about 58% of profits. Also, there's a benefit the last half from the return of international roaming. Now, COVID lockdowns have been lifted. Telstra has also been able to push through price increases to offset inflation. Importantly, it's changing its customer agreements, so it can now annually review pricing. I'm not sure customers are going to like that, but certainly shareholders will. It's really a good result for the new boss, Vicky Brady. The strategy is very much based on the 5G network. That's critical to Telstra's future. It's the dominant player in that space. Loyalty is really good at the company. Churn rates are relatively low. Things like the Optus attack helps those numbers. And of course, we all now live on our mobile, so changing providers isn't what it used to be. All in all, a pretty good result from Telstra.
Yeah, certainly seems like it. Story number 2, Sean, the unemployment rate crept up to 3.7% last month, the economy now having laid off workers for 2 months running.
Yes, it suggests that maybe the 9 successive interest rate hikes are starting to bite. Mind you, Michael, an unemployment rate of 3.7% is still very, very low. Now, the Bureau of Stats figures shows that 11,500 people lost work last month. There was a 32,000 increase in part-time employment, but that was more than offset by a 43,000 drop in full-time employment. Number of unemployed people increased by about 22,000. Participation rate was a touch lower at 66.5%, though that remains pretty high. Reserve Bank reckons that the unemployment rate will reach 4.3% by the end of next year. Yesterday's figures just suggest that maybe we're losing a few more jobs than we thought at this point of the economic cycle.
Story number 3, Sean, gold miner Newcrest has rejected the $24.4 billion bid from global giant Newmont, but has left the door open for a return offer.
Yeah, so Newcrest will give access to Newmont confidential information in the hope that it flushes out a higher offer. It came as Newcrest outlined its half-year results. It announced a much better than expected $428 million profit and a much, much bigger dividend, including a special dividend. In fact, the dividend was about 3 times what people expected. Nothing like having a cracking result when someone's trying to buy you. Acting Chief Executive Sherry Du said the higher than expected dividends reflects the company's confidence in its ability to simultaneously develop projects and maintain shareholder returns. On the Newmont bid, big shareholders have said it's too low, and obviously the Newcrest board agrees. It's allowed Newmont access to this non-public information, which basically says it wants Newmont to go, have a look at the books and come back with a higher bid.
Sean, story number 4, this is an interesting one. Consumers are opting for slim and sleek cans in alcoholic seltzers, pre-mixed spirits and craft beers. They're lighter and more convenient for millennials and Generation Z, and that's helped can and bottle maker Aurora.
This is a story for you, Michael, you millennials out there. Now, Aurora's share price jumped 15% yesterday, the best of the top 200, after its half-year earnings jumped by 8%. Volumes increased by more than 10% in the 6 months to the end of December. The company's now investing in planned expansions to keep up with demand from all those millennials and Gen Zers that like 250ml cans in soft drinks, craft beer, kombucha, all that sort of thing. In fact, the company's now got more than 200 customers in the seltzer and craft beer segments. That's twice the level of 3 years ago. There you go.
That is quite extraordinary growth.
Yeah, it is. And it's amazing how the trend has benefited this company so much.
Yeah, absolutely. All right, last one, Sean. How about this? Story number 5. Mattel is hoping a relaunch of Barney, the purple dinosaur, remember him, on TV screens, in theatres and in the toy aisles can really revive the struggling group.
Yeah, so toy makers, Mattel, Hasbro Inc. is another one. They've really struggled in the past few years and earnings are down. So Mattel's hoping that Barney, which Barney's actually 30 years old now, will resonate again with today's parents and kids. So an animated series for preschool kids is set to debut next year. Plans include books, apparel and accessories, as well as toys and content for YouTube. Mattel also has a new Barbie movie starring Margot Robbie. That's the Australian Margot Robbie, slated for release this year. Mattel is hoping that Barney can save their hide.
Oh, well said. That's it. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Friday, the 17th of February, 2023. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. And don't forget as well to check out How Do They Afford That, which is our sister podcast, all about making your money work a little bit harder for you. This week, it's a cracking episode on budgeting, basically the perfect model to redo your household budget. I'm Michael Thompson, and that was the Fast Five by Fear and Greed. Have a great day.